Hello, everyone.
Hello.
Unfortunately, today we lost two of our speakers. So
they're not dead, though.
Yeah, they're not. They're not. So
They're
both
good.
has family issues. That's why we will be three of us today, and I will be the moderator. Thank you so much for coming here. He announced me in a wrong way. I'm the co-founder of FirstBatch, but probably some of you already know me. More than almost 10 years, I'm in this ecosystem, and I touch pretty much every part of it. Like influencer part, I have almost 500,000 followers, entrepreneur part, you name it. So today I am meeting with Caddy, but I know him for a really long time. And I promise you today, I will do my best to not make it boring session for you. So if you'd like to say a couple words about yourself and your projects, please go on, and then I will start with my questions.
Amazing.
Please,
Well, yeah, Katie Evans, you all just heard me now. This time I actually get to speak, which is something I love to do. So I work for Swarm, and we are a real-world assets protocol. We've provided end-to-end infrastructure to bring securities and commodities on-chain. So we've started that with our own assets, so publicly traded stocks like Apple and Tesla, you can trade on our platform today. And we've also recently moved into gold. But then people can come and white label our infrastructure and tokenize whatever their heart's desires and build marketplaces to trade those assets as well. So we have issuance, trading, and on-chain verification, or proof of reserves, as we like to refer to it in this industry. My background is somewhat schizophrenic. I actually started off in the fashion industry before moving into charity when I was a good person, and then moved into financial services, specifically commodities trading, because I needed money to buy expensive pairs of shoes. And then moved into DeFi about 6 years ago and really sold my soul to the devil.
Hello, everyone. This is Doruk. I'm the head of international markets for Agora. Agora is a stablecoin backed by OneEck, the fund that has more than $120 million assets under management, and also the first issuer of the spot Bitcoin and Ethereum spot ETF.
Really fancy.
Yeah,
Intro.
It's really fancy company, and I've been in the space as hobbyist since 2017. I have my own YouTube channel. It's called Doruk İşmen. You can find out through searching. And I'm the first founder of the first university blockchain club called ITU Blockchain. And I've been in the space since, as a professional way, since 2020s. And during that time, I've launched few global operations in Turkish markets, such as Bybit, DYDX, and Scroll. And now I'm with Agora, and we are trying to create partnership with centralized exchange, banks, fintechs, and few different entities.
All right, enough intro. Let's start talking about fun stuff. But before I move further, I would like to congratulate Demet and his team, because this is the third year. Is it third year, Demet? I'm involved. No, it's your sixth year, but since last 3 years, I involved both as a jury, also as speaker. So it's getting better and better. I think this is amazing to bring Turkish government body and you all together. I think this is a great job. So thank you. Well done. So let's start with the latest. Paul Atkins, who is the new president of SEC, was mentioning about some ease of DeFi, and that raised the question of if the second DeFi Summer is coming on the mind of everyone. But I wonder what you think about this. Before that, I'd like to say a couple more words, because we normally had two more speakers, so I have to consume time a little bit. Sorry for that. Do you feel like the government body and regulators somehow chained DeFi, and now they show themselves like they are easing it? Or do you think that they will literally ease it? Is this clear? Is the question? Or I can ask more fancy way, because
No. I mean, it's clear to me. It's a big question, though.
Yeah.
And the thing is, the minute you start touching on topics of regulation, you quickly find out how nuanced it is. I mean, the sort of the international regulatory setup when it comes to any financial markets, not least DeFi, which is this new untouched, so far untouched thing, is it changes depending on where you sit in the world, who you want to offer products to, and essentially who you're building for. So at Swarm, the co-founders started off in Palo Alto in the US. They started with security token offerings, and then they realized, well, why am I tokenizing? And the answer to that is liquidity. And at that stage, there was no credible platform that could trade these tokens in a decentralized manner. And they actually then looked to Europe because Germany came out, which is very unlike the German regulator, and put a line in the stake in the sand and said, right, crypto assets are now defined as financial products. And they classified those under the German Banking Act. Now, a lot of people in Germany at the time were scared by this, a lot of innovators, because there's always the question around, does regulation stifle innovation? For us as a business that we're going after traditionally institutional capital, who largely have fiduciary responsibilities, there is no escaping regulation. So we actually saw it as a benefit and went towards the German setup. We've now kind of diversified our pot, and we take a very cross-European look when it comes to regulation. So, for example, our tokenized securities, so the stocks and the bond ETFs, all benefit from having something called prospectus regulation in Europe, which means we can offer directly to retail clients, which a lot of RWA players can't today. So we've seen a way of leveraging existing regulation to help benefit DeFi. However, that's only when it comes to issuance. When it comes to trading, there is no regulatory provision anywhere in the world that really accounts for that. And so we're trying to sort of show how things should be done, sort of show people, not tell them, and define standards ourselves in terms of making sure that every asset is mapped one-to-one with the real underlying asset, like you're doing with your euro-based stablecoin. It's having proof of reserve, so you can always attest on-chain that the assets are where we say they are. It's having insolvency protection, so if Swarm goes out of business and you hold a tokenized stock with us, you as a holder of that token have a direct claim on the underlying asset, so you're not making a bet on our balance sheet. You do not need existing regulation to help protect investors when we believe the code and the programmability of how you can build DeFi-based applications can actually inherently protect investors.
Great answer. I was planning to touch that point. I will come back to you with the real-world asset tokenization. Before I move microphone to you, I would like to make a quick public poll. Can you raise your hand if you think that DeFi is essential for the world? It's like we really need it. Or like traditional banking is enough. Okay, so do you think that with DeFi 2.0, DeFi is changing the concept that we understand, meaning that it's getting more close to TradFi? Do you think that DeFi is getting more close to TradFi? Yes, right? But now the question is coming to you. With the VC domination, all this, I am checking my notes, like delegation mechanism, governance tokens. Yeah. Before we were already complaining about that, right? So we were saying that DeFi maybe is not that decentralized. And now with the latest regulation and changes, I think it's getting even more closer to TradFi. Yeah. What do you think about that? And do you think that Paul Watkins' announcement and words are good for the ecosystem or not?
Yeah. First of all, I'm not a lawyer, so I will say this as an hobbyist. I will mention this as an hobbyist about this question. So, like, I think DeFi is changing, as you said. It's like it's converting itself as TradFi, and to be honest, I don't like this change, because at first, like when you think about DeFi and like Bitcoin first times, it is like we are changing the world with a new alternative financial system. Mm-hmm. But now we are like DeFi and the other protocols, cryptocurrencies are changing into a TradFi businesses, because like right now we have like Bitcoin, Ethereum spot ETFs through different funds, through different issuers. We have lots of stablecoins. Yes, I work in stablecoin. It's a centralized stablecoin, but I like DeFi. I like the DeFi. We need DeFi for the emerging countries, because when you think about the developed countries, yes, they can access the highly advanced financial instruments. But when you think about emerging markets, not like Turkey, like let's say Indonesia or even in Africa, those people cannot have the access of those high advanced financial instruments. And DeFi can provide this very easily, because at the first day, DeFi is global, it's decentralized, and it's inclusive. Like, you don't need to, it's very easy to reach. So for the SEC side, I think the SEC chair mentioned that DeFi won't be regulated in any way in US. So maybe this is not the exact words. You can mention the exact words, but I understand from the words from these understandings. And to be honest, I agree with this, because I will ask you the question, can you regulate internet? Yes, you can. Slightly, maybe you can regulate it. With front end, you can block the access, you can block the front end.
People can use Tor.
Yeah, but people can use Tor, or people can use VPN. Especially in Turkey, we have lots of, let's say Discord, right? Discord has been banned for maybe more than 1 year. So, but people get access to Discord too, with VPN. So the thing is same with DeFi. Yes, you can ban the front ends, or you can limit access for the internet sites, but in the end, you can't block Ethereum.
Okay, so
Yeah,
go ahead.
Can I challenge you on that?
Sure.
Because you're saying that, it started off with Bitcoin, and that was, the true principles of what decentralized trading, decentralized assets look like. It was an asset because arguably most people access or buy Bitcoin through a centralized exchange.
Yes.
So it's almost it's paradoxical, right? When actually, if you look at DeFi, when it comes to trading, yes, you're going to have onboarding of new assets into a DeFi ecosystem, which have gold's a decentralized asset, but you can bring that and you can trade it in a decentralized setting. So I think we need to be careful here about whether we're talking about the assets or whether we're talking about the trading infrastructure, because the DeFi-based principles have a very different meaning when you apply those to traditional assets versus going for a decentralized asset like Bitcoin, but you're actually trading it through a very highly centralized forum.
Yeah. But by the way, I'm mentioning...
And also, we can also include custodian dilemma here too. So you can buy it from any exchange. For example, Binance TR is the sponsor, but then you can withdraw it to your own non-custodial wallet. Anyways, go ahead, please.
Which is a tenet of decentralization, right? Having that self-custody and having that control and ownership over your assets.
Yeah, let's turn to you.
I'm mentioning, of course, we need a regulation in the centralized aspect of crypto, centralized exchanges, real-world asset tokenization, because those are the centralized partners of the ecosystem. But when you think about DeFi, such as Uniswap, Aave, MakerDAO, or different things like lending, borrowing, and automated market makers, those are the concepts that you cannot regulate it, because it's directly code is law. So that's why when you think about the protocol level security and protocol level infrastructure, it's not possible to regulate them, because people can get access in every aspect, because people can use VPN or any other things, right?
I mean, you can regulate these things. It just depends on the activity you're regulating and why. Because, of course, you put code out there, it's forever there, it's omnipotent, and people can go and access it, whether it's a front end to house that code or not. People can go in and just engage with the smart contracts. But depending on who you are in the market, might prevent you from accessing that code or dealing with that code. And that's where regulation comes in. If you're a retail investor and you're happy to go and trade these products and you don't care who your counterparty is, then go ahead, use those free systems that are currently free from regulation. We've built completely decentralized infrastructure, which currently falls outside of regulatory purview. We are saying that there is a market for that, but there's also crucially a scale by which people need to self-select the level of compliance and AML that they need, and we should be giving the market choice based on what current regulation looks like.
But that's not a DeFi.
It is DeFi because it's using decentralized infrastructure.
But if there's a KYC and AML, I can't count it as DeFi. Can you count it?
Yeah, I mean, we are talking about different definitions and different part of it. As I'm a moderator, I just didn't want to involve, but I agree with you. I mean, having a decentralized system and benefiting from decentralization is something, but also bringing it to end user is something else. So I think there's a contradiction of definition. I can come back to this point, and I will be more than happy to discuss with you towards the end, but now I have a question to you, Katie, regarding real-world assets. So as you say, and also in your website states, Swarm defines itself and its services as a gold standard for blockchain-based finance, and you're working on tokenizing real-world assets, as you say. I think this is amazing. So I think at some point, pretty much every major markets will tokenize its assets. So I think there you're making like something flag carrier. And the same question comes to you, and I think this will also feed the argument between us. With services like yourself, do you think that it's bringing it towards the TradFi, or like how do you feel about that? You already answered this question, but I'm giving the microphone back to you so you can say maybe a couple other words. Yeah,
I think there's a real convergence happening. So on the one side, you have TradFi who are understanding what it means to have a programmable financial market that more people can access, to your point earlier, which is very appealing to them because you can suddenly start creating trading pairs, financial products, even a new financial internet that hasn't previously been possible with the current infrastructure that's available today. Second, and then on the other side, you've got as I'm defining, the DeFi-based market, where you have, which has historically been solely based on very volatile crypto assets who are now crying out for collateral that is uncorrelated to those highly volatile crypto assets. And they need to find a way of being able to hedge, for example, have better treasury management on-chain, have more sophisticated portfolio management and trading strategies that DeFi then offers by having the availability of these assets on-chain. I think where those two things meet in the sort of real world are actually emerging markets like Turkey, for example, which is a prime candidate for this stuff. Because if we look at the onset of the stablecoin market, that's really the first tokenized real-world asset, right? Yep. And so once you then start combining that with other assets, like whether it's a stock, a bond, or a commodity, and you have locally denominated stablecoins, you suddenly remove all this FX friction that was once created in the traditional markets, and you can start creating a much more streamlined and efficient financial local market. I mean, I was speaking with one of the largest brokers actually in Consensus in Toronto last month. Their USDC stablecoin volume is arguably their largest, which we probably all would have guessed, right? But do you know what their second largest stablecoin volume is?
Turkish lira?
Turkish lira.
Turkish lira.
So when you start combining stablecoins with real-world assets, you suddenly unlock this entire new financial market paradigm, and that's where we believe decentralization becomes really important.
All right. So I think we are pretty much all agree that with DeFi maturation, we are coming to a point where decentralized systems are somehow feeding companies and services that can scale up or provide different services by using decentralized technologies, but also decentralized finance, as we know from a couple years back, is also evolving. So as an Ethereum lover and supporter, I have a question to you. As time goes by, because we get used to DeFi, to see DeFi with Ethereum, okay? And towards the last let's say 2 years, this is about to change and it's changing, right? Now we are going multi-chain DeFi world.
Yeah.
And I would like to hear your comments on this. With this more mature DeFi world, what do you think, how it impacts multi-chain DeFi infrastructure in terms of liquidity, user experience, or do you think that it's enriching the ecosystem, or do you see it as a danger for the ecosystem?
Yeah.
What do you think?
I think that's a hard question to answer because there are good ways and bad ways becoming a multi-chain DeFi ecosystem. So first of all, let's count it as bad ways.
Trump token.
Yeah, Trump token. Like I'm sure that like some of us bought the Trump token. I also bought it as speculation.
Did you get rug pulled by Melania?
I got zero.
Yeah, I rug pulled from Melania, his wife's token too. So yeah, like that's the case. Like if you have different chains, there are some different type of DeFi ecosystem, such as...
Sorry to interrupt. Do you know that with this Trump dinner for the Trump token holders, Justin Sun, towards the end, tried to sell Trump watch to everyone in the room? I think that pretty much explains everything, but go ahead, please.
Yeah, so like there are some casino stuff, like chains. There are some payment stuff, ecosystems. There are some gaming-focused ecosystems. So these ecosystems are really differentiate from each other through different subjects. So I think that's not a big problem, but this causes the liquidity fragmentation through different ecosystems, and also interoperability problems. There are lots of like trust minimized solutions for the bridging. Like right now, when you think about if you want to like bridge from Solana to Ethereum, you need to use a centralized bridge, and that bridge has like some problems because of the multisig or because of the like I'm not trying to become really technical, but I'm trying to say multi-chain ecosystem can cause the risky ecosystems because of the different approaches, such as like Solana has different approach, Ethereum has different approach, and that's why we live in a very different and multi-chain ecosystem. So these are the bad ways. These are the bad things. So good things, experimentation. I think that's very good, and this is good for DeFi because we are really early in the DeFi ecosystem. That's why we need to experiment new stuff on different chains, different stuff. So that's a very good point. The second good thing is like competition. Because without competition, you won't get any great products or great protocols even. So that's why competition is always good. And with the new ecosystems growing, we saw lots of like competition in layer 1 ecosystem and layer 2 ecosystem.
Doruk, sorry to interrupt again. Yeah. Do you think that really the competition creates some sort of results? Because what we saw already with these Trump token launch and Melania token launch is that Solana got most of the traffics, and without almost any impact on Ethereum. Now its traffic is going back to Ethereum. I feel like this is the nature of human attention. So we are putting something on the center of our attention, then we're getting bored of it and turning back to the original.
The crypto market is rife for anyone with ADHD.
What changed? I mean, like, what changed? Why the traffic is coming back to Ethereum?
I think
not
like
much.
Actually slightly. Like it's changed.
Slightly, but
because like
about to change. Let's say.
About to change, yeah. Because like Ethereum Foundation understand that there is a real competition in the layer 1 ecosystem, and that's why they need to change their like research and development approach to product approach. Right now, like Ethereum ecosystem is more focusing on the product side and user experience side. So that's why I think it's changing. I cannot say like that's changed. Like there's a specific change, and that because of that change, people are coming from Solana to Ethereum. I cannot say that, but yeah, like it's as I said, it's slightly a casino, and like you need to withdraw your money from casino. Yeah.
Okay. to you. What do you think about the multi-chain nature of DeFi? Because I was seeing similar stuff with the gaming ecosystem, GameFi, and now we see mainly layer ones and most of them are idle. So the majority of the volume is on Ethereum, and also Solana is on ramping many new users. So what are the positive things? What are the cons, pros?
I mean, honestly, every new chain that launches, I feel like are RWA chains. That seems to be the way that you can raise capital at the moment. We are chain agnostic, so our role as enablers of real-world assets, whether that's to layer ones or twos, or whether it's for builders in the space who want to build on top of those assets, for us, it's about we build utility at scale. And that includes an interoperable strategy. So we've actually just integrated with Chainlink's CCIP product, which enables us to deploy our assets onto 17 different chains. Solana has actually just been added. So we take a very an agnostic view when it comes to which chain to be on, because we would rather let the end user or the market decide, and we just need to make sure that the assets are enabled on those chains.
Okay. Let me wrap up super quickly, and I will also leave the ground to you for last comments, because we have like almost 3 minutes left. At the beginning of our speech, I told you I have different hats, right? One of the hat is influencer, and with my social media, I start a program named Canlı Cüzdan, meaning that live portfolio. And with this, with our non-custodial wallets, we are going to DeFi apps, or we are using protocols like ODOS and trying to buy. And I want to do that because I want that everyone watch what I do with my wallet, because this is the main problem of people when we talk about the finfluencer or crypto influencers. They say that they bought it, they don't buy it, right? Or they say they sell it, but they sell it before. So I want that I give a chance to people that they can follow my portfolio. But what I see with DeFi is that, unfortunately, we're still far away in terms of liquidity perspective, because sometimes, for example, I like to buy a token and I have huge slippage. Yeah. Even though don't think that I'm buying for like $100,000, right? I'm buying just for 2K and I'm getting 2% slippage. This is unacceptable. Let's put it aside. Also, it's such a big challenge to make interchange, or like I can buy one product from one chain, but if I want to buy from that one, others that cannot reach out that one. For example, we like to buy Hyperliquid's token. It was such a challenge. So that's why I would like to say, and I would like to conclude my words by saying that we are coming to a point, but we're still far away, the best optimum scenario. And I see the inclusion of TradFi both as an advantage, also a threat to the DeFi ecosystem. Advantage because it will bring best customer experience practices. A threat because it will silently kill it. You know, like it will look like they ease you, but they will kill you. So please let me get your last words, and then we finish.
I think, like, as you said, DeFi is a pretty early stage right now. From like liquidity perspective, from user experience perspective, it's pretty early. But I think it's the future of the finance. Because as I said before, like the emerging markets, those people need to reach out to like high advanced financial instruments. And the answer is DeFi. Like people can get the access through DeFi.
Okay, I agree with that.
I'll keep it very short. I think rather than being threats to each other, they're actually complementary. I think DeFi needs the availability of those assets, uncorrelated assets, and I think TradFi sees the benefit of that decentralization can bring, and that's where I'll leave it there.
Thank you so much. Thank you so much for listening to us.